I rang you yesterday, like at your hotel, but I think I missed you at the Mercure Hotel. I rang your room. Your reception put me through, but I think I missed you about 7:15. No, about 7:15. I think you might have gone. You were probably on your third dessert right now. Oh, you had kangaroo again? I tasted a little bit of kangaroo yesterday on Monday evening. It was a kangaroo with crocodile tail.
Oh no, that's sorry. Just have a
Have you seen many kangaroos with crocodile tails? I mean, what's that?
Yeah, it's population control and it doesn't affect erosion of the soil, so it's a good thing to actually eat. Yeah, crocodiles like chicken as well, and the English one was weird, but kangaroo is good. Sorry, I came to this type of stuff because we don't open the
Right, I think we're missing 2 people.
It's only 6 o'clock.
Yeah, that's off-putting. And what's even more off-putting is it's actually working as well.
It's accommodating for everybody's jet lag by not being right.
Right.
It's the time in the UK. Actually, it's not.
It'd be awful if there was a clock, but when you saw it, it actually switched to your own time zone.
Right then. Morning, everybody. Shh. Or as they say in our parliament, order, order. I was thinking of actually just checking if the so-called students are awake this morning. As a very, very quick exercise. I'm not going to ask you to stand up, but you have no idea what I'm going to say next. Right. As a little test to see how awake you are, can someone I think you've justified my argument. And we hadn't heard that rehearsed. That was the spontaneous. Right. Can someone at the back give me a letter, an alphabetic letter? L. Can someone give me, does it appear?
There we go, that's better.
Can someone give me another letter? At the back. Come on.
D.
D.
Get a back.
And another letter. R. Right, I'm going to open this up to anybody. For each of those letters, can you give me a girl's name, a boy's name, and a statistical term?
One for each?
And this is open for everybody. The first person who gets one for each one, yell out. And even Aborigine names are legitimate.
How do you want it?
Oh, dang, I've got Dutch names.
Right, okay, go ahead.
Laura, Larry, and Lydia.
Excellent.
Dana, Daniel, deviation. Rhonda, Rob, and regression.
Top marks. I'll get you a box. I'll get you a packet of chocolates later for winning. I knew I forgot something this morning.
John Powers the names.
Yeah, okay. You can see there's a competitive person in the room, can't you? Right, more seriously. You can all stop working on that now, okay?
He should be allowed for a throw now.
No, that's not fair. Right, okay, now seriously now. Enough of the light-hearted stuff. Right, this is session 2, and what we're going to do today is basically do a quick recap for a few minutes of session 1. We'll describe and cover the use table, like we did the supply table. Is this too loud, or is it just... Is that fine? Okay. I've got an echo in my ear at the moment. Right, we will take the Farmer Fred case study that we had yesterday, but we'll populate this time the use table. Okay? I'm going to cover the identities linking the supply and use table. We're going to describe what are the components of the three approaches to measuring GDP. And then we're going to use a Farmer Fred exercise to determine GDP in the world of Farmer Fred. Okay? And if there's enough time, then I'll give you a table of numbers, real numbers, and you have to estimate GDP using the identities that we cover. Okay? But we'll see how it goes. So, quick recap from yesterday. We covered why do we need supply and use tables. And obviously that's used to set the level of GDP. It brings all the components of the three approaches into the same framework. We also covered the circular flow of income, and that's what's happening at the macro level. And then we went down to the micro level to Cowboy Bill's shoe factory. And hopefully people can understand all the processes, the inputs, the processes and the outputs that are generated. Therefore, need to measure the activity at each stage in order to determine gross value added. And that is the key variable that registers the contribution to GDP. Okay? We then went on to the supply table, and obviously the supply table has a structure. You've got the domestic output part, you've got the imports, the trade and transport margins, and then the taxes less subsidies on products. And bearing in mind, the domestic output is measured at factory gate prices, at basic prices. The imports are measured at the dock, and the trade and transport margins column sums to 0, and the taxes less subsidies on products are like things that are related to the more that's produced and sold, the more the tax or subsidy that's incurred. So VAT, excise duties. In the UK we have things like air passenger tax, insurance premium tax, stamp duties, etc. Okay? Now I just want to pause for a moment. Is there anything from yesterday morning's session that you couldn't sleep last night because you needed the answer to, or when you woke up...
In the afternoon.
Sorry?
Yesterday morning or the actual?
Yesterday, yeah, that's very good. Yesterday afternoon. But is there anybody with anything, and it doesn't matter however simple or complicated it is there anything you need checking? Yeah?
It's just that the trade and transport margin they get 5. Is it for the oven?
For the oven? Oh, right, okay.
So plus 5.
Is that readable?
Could it be focused a little bit more?
I was just doing this.
Yeah.
It's probably a bit too much. That's
We,
right.
Yep.
Okay.
Yeah.
Ah. He's already earned his money for today. Right. Which part? Was this the 5 and the -5? Yeah? Okay. If you remember, John the retailer bought the bread from Tom the baker for 35,000. He did nothing to the bread, but then sold the bread for 40,000 plus the 4,000 sales tax. So the actual selling price was 44,000. But in order to calculate the output of John the retailer, you take the 40,000 at basic price less his purchase price, which gives you the output of 5. When you come across here, because you do not buy retail distribution, you have to have the -5. John the retailer earned margin on which product? Bread. Bread is classified to production. So you have the -5 and the +5, 5 on production, -5 adds to 0. Is that okay? Cool. Anything from anybody else from yesterday? Okay, go on, I'll let you have this once.
If you produce the supply table at basic prices, then there will be the production from the distribution sector, isn't it? So then this 0 thing you do there, if the supply table had been at basic prices, is that correctly understood?
If the supply table is calculated at basic prices, that's all you have.
Then there will be, of course, output from distribution sector.
Output.
Output, sorry.
No, that's what it is. Okay, you've then got output of 5 of the distribution product. Okay? So the supply table at basic prices is literally that block. You move the supply table at basic prices to purchaser prices by making 3 of those steps. The margins, the taxes and the subsidies. They are your valuation steps. The imports is because you do not have a closed economy. Okay? Imports is not a valuation step. It's important to note that. The valuation from basic to purchaser prices is achieved through the margins, taxes and subsidies on products. Okay? Anything else? Okay, go.
This is a bit more advanced, so I don't know if the others might be. I'm still stuck on this import of services, so import of distribution services. You get someone else to transport goods. So you said it would be the imports of goods and services as distribution, let's say.
So you can have an entry in that there.
Sure, but used to move, for example, the bread. I would also think it would show up in the total supply of products because the purchase price of the bread includes what is paid for that transport service.
Let's say, for example, you are based in Holland,
Yeah.
I'm in the UK, I've asked you to move bread from one place in Holland, say the farm in Holland to the shop in Holland. For me, that's an import of a service, and that's, whether we want to call it trade, transport, whatever. That import will be shown there.
But that's,
But there's no consumption of bread in the UK.
no, but I'm saying that all this is in the UK.
Yes, that's right.
All this is in the UK, and then you get a Dutch person to transport this bread in the UK.
Ah, but then that would enter the output of the provider. So if you did the reverse of what I've just said, you're in Holland, you've asked me to move bread from a UK farm to a UK
No, but you admit,
factory. Sorry?
I would say, well, we'll do this later.
Okay, but that will, in that case, it'll be my output. Okay, it's domestic output, which I then export. Okay, we'll pick that up later then. Right, anything else from anybody else? Okay. Right then. What we're now going to do is cover what the use table does. Right, now the use table has a slightly different structure compared to the supply table. In the supply table, we determined all the goods and services available for that economy to consume. We didn't care where it went. In the use table, we want to record all the consumption of goods and services, but we don't care where it comes from. Okay? Now it's the flip side. We do not care whether it's produced within the domestic economy or whether it's imported. So the use table will have a structure that looks like that. In the first block, we have industries going across the column, and we have products going down the side. So agriculture industry, all the way through to manufacturing, etc. That first block will be the same dimension as the domestic output block in the supply table. Okay? So if it's 100 by 100 or 200 by 200, that block will be the same on both sides. So on the agriculture industry, we will say how much agricultural produce it buys to make its output. Does it buy pesticide? What are all its other inputs? Advertising, petrol, insurance, any ongoing current expenditure. So we record all its inputs to make the output, that industry, we've recorded in the supply table. Okay? So in this column you can have lots of entries. There is no diagonal concept. So when you now add up that column, you have total intermediate consumption. All of those purchases are recorded at the price that you and I pay. Purchasers' prices. So if I ask a farmer, how much did you pay for your pesticide? I will ask for his purchaser price, the price that he has paid. The farmer will not know what is a basic price. Okay? So if when we collect the data, we need to collect it on the basis the businesses understand. So similarly, if I'm a motor vehicle manufacturer, motor vehicle industry buys engines, parts, carburetors, wood for the dashboard, plastic, windscreens. It may buy insurance, marketing services, advertising services. So there are a lot of inputs to the motor vehicle industry in the form of goods and services in order to make the output of the motor vehicle industry. Okay? And again, you add the column total is total intermediate consumption. So these are goods and services used up in order to make the output. So if you think about Cowboy Bill's shoe factory, these are all the raw materials, energy, services, etc., used up to make the shoe. Now, beyond that, we know every company has to basically employ employees. It has labour. Okay? Now, labour, in the sense of what we record here, is not the numbers of employees or employment, it's the cost of employment. So it's labour costs. So this entry will include wages, any national insurance contributions, so wages and salaries, national insurance contributions, any pension contributions. So any labour costs will be included in that cell. We then have taxes less subsidies on production. Now, unlike the taxes less subsidies on products, these are fixed. So these are things like what we call business rates. So a motor vehicle manufacturer may have a factory, and depending on the value of the factory, it pays a rate to its local government or local authority. It doesn't matter if it makes 1 car, 1,000 cars, or 1,000,000 cars. It's a fixed tax cost that it pays to its local government. Okay, so if you notice, so these taxes are very different from the taxes on products in the supply table. So it doesn't matter about the volume of output produced, it's a fixed cost. And then finally, you can have a gross operating surplus or a gross operating deficit. Companies may view that as a profit or a loss. If you add up the whole of that column, you will get what we call total inputs at basic prices. Is everyone happy with that so far? So we've recorded for the motor vehicle industry all the goods and services it's used up to make its output. The sum of that column in that box is total intermediate consumption. You then have labour costs, which have various components like wages, national insurance, pension contributions, redundancy payments, etc. You then have taxes less subsidies on production, like business rates, or if you have a fleet of cars, you may have to pay a tax on each car. It doesn't matter how many miles a car is used for, you pay a fixed tax on each car. So these are taxes on production. And then finally, you've got a gross operating surplus, which is roughly speaking profits or a loss. If you add up all the entries in the whole column, you get the total inputs at basic prices. And then very importantly, if you only add up those 3 entries in that box there, you have gross value added at basic prices. So gross value added is made up of compensation of employees, taxes less subsidies on production, and gross operating surplus. or a gross operating deficit, so it can be negative. The sum of those three is obviously very important because that tells us what's the gross value added at basic prices for that industry. And the same applies for every industry in that block. Is everyone happy and followed that so far? Yep. Go ahead.
You mentioned, you say the taxes are fixed costs. What about corporation taxes?
Right. Corporation tax is a tax on income. And what we're talking about here is the production boundary. We're only interested in taxes on the production of goods and services, or the taxes on products which are related to the production of goods and services. So income tax, capital gains tax, corporation tax, inheritance tax, these are all forms of taxes on income. They appear in the accounts, but further down the accounts. Okay?
Is depreciation?
Keyword, no, it's a good question. Keyword, gross operating surplus. So if we remove the consumption of fixed capital, i.e. depreciation, then that would become a net operating surplus. Okay?
Where is the input purchase from abroad?
I don't care. Remember I said at the beginning of the supply table, at the beginning of this, in the supply table, we don't care where the destination of the goods and services go. In the use table, we don't care where they come from.
So that means those inputs are domestic as well as?
Yes, correct. Because if I ask a farmer what your purchases are, he may not be able to tell you whether it's a domestically produced product or an imported product. It depends from whom he's buying. So if he buys from a wholesaler, he doesn't know if the wholesaler has imported that product because it's an indirect import. Agreed? So what we do in the use table, we record what are the producer's purchases adjusted for the changes in inventories of materials and fuel in a way that will reflect what's really going on. So the respondent on our forms doesn't get confused. Well, I don't know if the wholesaler imported it or didn't. But what I do know is the product I've purchased and the amount I've paid. So that's why this is recorded at purchaser prices, and it's both domestic and imports. Okay? And
So intermediate consumption is measured at purchase prices, and the value add is at basic prices.
yes,
You add up all of those, you have basic prices at the end?
correct, yes. But that's one of the identities we have to force. Yeah. Because the outputs were measured at basic prices. Your total inputs will also be measured at basic prices, which means your value added will be at basic prices. It forces value added to be at basic prices. Okay? And if you want, I can come back and do a bit more clarification once I've completed the use table. Anything else?
Can you elaborate how you record the taxes like VAT and taxes on production you have? Different kind of
Right. In that row there, they are your taxes on production. They're the fixed taxes. The taxes on products will be within here because the valuation is at purchasers' prices. Okay? In the use table, you do not need to separate out the taxes on products. Okay? For input-output tables, yes you do, but not for supply and use tables. So you have to be careful about the distinction. So in here, when you ask a business, or if I asked any of you, how much did you pay for your 52-inch plasma television screen last week, you will give me a value. Not one of you will be able to give me a basic price value. You wouldn't know what the basic price value is because the seller isn't going to tell you their margin. They're not going to tell you the components, are they? So when we ask the seller what they've sold, that's a different issue from when we ask the purchaser what they've bought. So when we ask the purchaser what they've bought, it's at the price that they've paid. Purchasers' prices. Okay? Yeah?
My other question related to the value added part, so that part, your tax you pay to the government, is that part you report in your value added?
Now, in here, we've said the total inputs is at basic prices. Basic prices does not include taxes less subsidies on products. Therefore, value added is at basic prices. Okay? Your intermediate consumption is valued at purchasers' prices, but your output and value added is valued at basic prices. Is that okay? Anything else from anybody else? Right, okay. If I go across this row for this block and add up those numbers, that total is called total intermediate demand. So when you go across the row, it's total intermediate demand. It's the intermediate demand of all industries for that product, irrespective of where the destination in terms of the specific industry. If you add the column total, it's total intermediate consumption. So be careful about the terminology. Consumption is not always the same as demand. Okay? It's subtle, but it is a difference. Right, so if we've now catered for intermediate demand, we now move to the next block, which is final demand. The first column will be households' final consumption expenditure. So if you and I buy a fridge, a car, a television, mangoes, drugs, I'm now drifting. In theory, even payments for prostitution services will be in here. In practice, you don't get many numbers recorded, okay? Or possibly in the Dutch, but I'm not going to, I can't vouch for any of that. Okay, so all the goods and services that you and I buy will be entering household final consumption, okay? But there will be an exception, an example I'll give in a moment. So when you have these entries in here, these will be valued at the price that you pay for your food, your theatre ticket, your car, etc. The purchaser price. Okay? We also have local government final consumption expenditure, central government final consumption expenditure, and non-profit institutions final consumption expenditure. These are all column headings. Okay? So for example, non-profit institutions serving households are like charities, temples, mosques, trade unions, etc. Local government and central government, I'm sure I don't have to define, but obviously that's part of the general government, and they buy stationery, petrol, insurance. They have a lot of inputs that they need to make their output. If you add up these entries, you also get a term called final consumption expenditure. So final consumption expenditure has got various categories of consumption. So households, central government, local government, and non-profit institutions serving households. Okay? So if you and I buy a car, it will be sitting in household final consumption. If a company decides to buy a fleet of cars to help its production process, that is called gross fixed capital formation. And that entry will sit in that column there. Now, gross fixed capital formation are basically the vehicles, the machinery, the buildings, the plant and machinery, the machines, etc., that have been bought by the company, that are not used up in the production process. They facilitate the production process, last for longer than a year, and in the EU there's some perverse definition of it's got to be more than 500 EQs in 1995 prices. It just shows how out of date that is. But they are not in the intermediate part. They are not used up to make something else. They facilitate the production process. And the only cost is obviously the depreciation cost. So in this column, you will have all the investment any business makes. It also includes, if you and I buy a house, or we make improvements to a house that last for longer than a year, that will be in this column, not in the households column. Okay, and that's a sort of unusual quirk. Why? You do not use a house to make something else. A house is an investment you live in. It helps you to live. So any purchases by consumers or households of dwellings and improvements to existing dwellings will be in this column. Okay. We also then have
How about R&D?
R&D. We are talking about SNA 1993, ESA 1995. Okay. The point that Ruben's making is the costs of R&D, whether successful or not, and there's an issue about whether it's freely available or not, will be capitalised. So all businesses undertaking any form of R&D, whether they do it themselves or they buy it in from an R&D company, the cost of that will be recorded in this column as capitalised item, and it will increase their value added and output. But this is a change, okay, so very clever. There's always a smart aleck in the audience.
And military equipment.
I'm gonna pass you on that one. It's the same principle. Dual military use. So if you have vehicles, for example, that are serving two purposes, they're going to have to be capitalised. Government consumption goes down, government capital formation goes up. Is there anything in this table so far? Yeah? No, it's good. Yes, yes, sir.
Where do you record the extra limits?
Sorry, the
Extra limits. Those institutions are being transferred to the government.
give me an example.
For example, my office is an office receiving the transfer from the government.
So your office survives, exists.
Yeah,
A grant,
yeah.
like a grant. Right, the grant does not get recorded here. Your office is part of public sector?
It's not it's public sector.
Yeah.
It's an autonomous.
But it only functions and survives because it receives money from government.
Yeah.
Therefore, it will be in the government sector, and it doesn't have output. Its output will be the sum of the costs. So all the materials you buy, all the labour costs, you add up all those costs, depreciation, that would be the output of your unit. And you must be in central government or local government. One of the two. Because you're not in public corporations, because you're not trading. So I assume you're in central government or local government. Okay, so that money that you receive is a grant. That does not appear here. What appears is your output, which is the sum of your costs. Because you don't charge for your output. Okay? Yeah? Anything else?
Well, dwellings.
Yes.
How will you go about measuring it? And
Very difficult.
yeah, it seems that there's nobody really recording it.
Well,
Very few.
careful. If you buy a dwelling, that's easy to measure. We have estate agents, you have to pay legal fees, stamp duties, etc. So you can measure that easily. If you improve existing dwellings, there are ways you can measure. What's difficult to measure is the imputed rental of owner-occupier dwellings. Because this is where people own their dwellings, they don't rent, so that's providing a housing service, that's output. That part is very difficult to measure. Okay? So there's really three components, and the imputed part is a modelled estimate, and that's difficult.
Government consumption, why does it appear in both the intermediate consumption and final consumption?
Can I come back to you on that one later?
Yeah,
No, it's a very good question, and I'll draw a diagram to show you why. Okay.
You cover the gross fixed contribution for the private.
This is private and public sector.
So that includes public as well as.
Correct. So if the government decides to build a hospital, that building will be capitalised and will be in this column. It's capex.
Until it's finished, or?
I don't want to get into private finance initiative
Okay,
issue,
sorry.
but it's investment. So when the government makes investment, say the government decided to buy a new limousine for one of its ministers, that is an investment in a vehicle. That purchase will be in here.
That's normally we call it development expenditure.
And what, the limousine? No. The limousine is a car. It's a vehicle. It will last for longer than a year. It facilitates the minister getting around, do his job.
What I mean expenditure for constructing bridge, roads.
Ah, right. Okay. There is a fine dividing line between, if, say, for example, government repaired a hole in the ground, that's a repair. But if it relayed the surface of a road, that's capital formation, because that's an improvement to an existing asset. So there's a very fine dividing line between a repair and an improvement. So for example, if you have, let's say, a greenhouse in the back of your garden, and it's made of glass. The wind, it's a very stormy night, it blows that down. Or blows two of the panes of glass out. If you replace those panes of glass, that is repair and maintenance. Okay? If you decide to pull the greenhouse down, put up a brick fixture with windows, etc., that's an improvement. That's capital investment by a household. But there's a very fine dividing line. What is a repair and what is an improvement? Okay? Anything else? Right, okay. We then have changes in inventories. So remember when I said if goods have been produced, but if they haven't been sold, they will be in inventories. So if a motor car has been produced but not sold, you can have motor cars as inventories. We also then have valuables. Valuables are like works of art, antique cars, antique furniture, classic cars, etc. Things that have been produced many periods ago. They have a value, but there's no production value. But when they get transferred, it incurs legal fees, auctioneers' fees, etc. That is what you want to record, because that's production activity in this account. So if a Monet produced many years ago, the value of the Monet and its output would have been recorded in the year it was produced. Any subsequent transfers is the transfer cost. Okay? Any legal fees, auctioneers' fees, etc. Okay? Not the full value of the Monet, because you're then repeating output production from previous periods. And then, like imports, we have the counterpart. We have exports in the form of goods and services. Okay? If you now add up every entry across that row, you will get what we call total use or demand at purchasers' prices. Okay? So for each row or each product, you add up all the entries, you will get total use or total demand at purchaser prices. Is everyone comfortable with that? So the key two major identities to note in this table The total output at basic prices, i.e. the sum of the column for each industry, is either the same as the total inputs at basic prices. The sum of these three entries in here form value added, and it's gross value added. And then if you add up all the entries in the row for each product, you'll have the total use of the product at purchasers' prices. Now note, in this table we have worked out what's the intermediate consumption, what's the final demands, all at purchaser prices, and we do not care where the products come from. So it's like your point. We do not care if it's an import or a domestically produced item. Okay? Is everyone comfortable with that? Right, so that's the use table. What I want to do for a few minutes is now bring together the supply table and the use table and show the links, which in a sense you probably will have already guessed, but just in case. So you've got the supply and use table. We've gone across the row and we've got what we call total supply at purchaser prices. We have the column. You add the column and you've got the total output at basic prices. You go across the row in the use table and you have the total use at purchaser prices. In the intermediate part, you have the total inputs at basic prices, and then if you add up the part in that blob, you have gross value added at basic prices. And obviously, the supply must equal the use, and it's an equal, not nearly equal, it equals. The supply of all the goods and services in the economy must equal the use of all the goods and services in the economy. We don't do dodgy adjustments because we don't know what they are. It equals, it doesn't nearly equal. Very important. At the same time, the output of every industry at basic prices must equal the inputs for that corresponding industry at basic prices. And again, it's not nearly, it must equal. And in that situation, we have gross operating surplus or gross operating deficit. You can imagine, well, that can become a residual. And then the other identity that's important, obviously, is the gross value added at basic prices. Right, is everyone reasonably comfortable with the use table and the links between the supply and the use table? Right, now I'm hoping, I think, apart from one person I've resolved, the people bought all their supply use Farmer Fred case study from yesterday. Right, so the next thing to do is, can you remind yourselves of that and complete the entries that will fall into the use table. Okay? And what I will do is I will put up on the screen the supply table that was completed yesterday. So you've got the supply table numbers. Now remember what I said about the identities that link the supply and the use table. Okay? And again, there's no catches. Go through the questions, but the aim is to populate the use table. Okay? And then in about 10 minutes, what I will then do is go through the values that exist in the use table like I did yesterday with the supply table to make sure everyone understands what we've done and why. So you've got the completed values for the supply table on the screen. And you can talk to each other. What has government done with the subsidy? Right, so why is it? It's the farmers. No, that's right. Yeah. It's equal. That's right. Yes.
But I think that in the tables also you see.
Yeah. Total inputs equal total outputs.
Because it is the same.
It's the same. Yeah. Yeah. Make sure you read the words.
Yeah.
The terminology is very important. Own final use is a...
Back is the word. There. Yeah, so it's on that table, not that. Always within that column. So it's got to go in there. Is it agricultural services?
Are you okay?
The household sector is paying the agricultural use of instrumentation.
If you went to stay in Farmer Fred's wife's
Yes.
accommodation room, not her bedroom,
Yes, no, I'm saying accommodation room.
what unit are you performing as in the economy? You're a household.
Yes, so it
Okay.
goes in the household sector, it was being classified as agriculture
What have you paid for?
for service, so it was the service then?
Yeah.
Okay.
It's a service product, but you're a household unit. Okay? Because you haven't bought agriculture,
Yeah, okay.
so it wouldn't be an agricultural product.
Yeah.
Although you've bought it from an agricultural provider producing agricultural produce. So that's the subtlety, is the distinction between industry, product, and household. Okay.
Yes. Yes. Yeah. Oh, wait, so where's the gross?
The blank use table.
Oh, subsidies on products is there. Is there?
So but this is not that. This is different.
Yes.
It's different taxes.
But is it a negative 5 in government fund? Subsidy on expenditure. Sorry, my brain is not. Okay.
It's in, it's
Facts
gross.
into it.
It's gross.
Now remember, you've got identities between the supply and use table. You might not have a figure for every cell. So some cells you get by residual. No.
That's the dodgy difference.
I like the word difference, yes. That's the only word I've heard so far. Garbage, dodgy.
The DD.
Government doesn't buy the bread. There's a very clear statement.
Do they ever participate?
This government doesn't make meetings.
It just collects taxes.
Yeah.
One by government buys,
If a government has its own canteen and employees and makes its food, sandwiches for its staff, it might buy bread in that situation. But I don't see that here.
That's the next paragraph which you left off. But because it's a government canteen, nobody goes there.
So then they make rules.
Yeah.
Say,
That's
oh,
the government in the first place.
Yeah, improvements on land, like irrigation, etc., drainage is treated as capital formation. Yeah. Right, I'll give you another couple of minutes, and then we'll go through the example together. Right then. Time's up.
Back of the magic roundabout.
Yeah. Right then, let's start with this. Now remember, you've completed the supply table yesterday using the information from this case study. Now, some of that information, as you can see, will have links with the use table. So you've already got some information, so bear that in mind. Now, what we're going to do now is populate that use table, and then we will determine a GDP estimate. So, can someone tell me, Farmer Fred, what were the inputs for intermediate consumption that he had? Fertilizer. And what product did we classify fertilizer to? Production. And what was the value? 2.
That was self-perpetuating.
Any other inputs?
Employment.
Intermediate inputs. Okay, no, but you say employment, we'll go with that. So what employment has he got?
10.
So he's got 10. So I'm putting that down here. This box down here is the breakdown of value added. Okay, so that's 10. Were there any other intermediate inputs? So therefore total intermediate consumption is 2. Do you know what the output of Farmer Fred is?
32.
Now is everyone happy? Because that 32 comes from there. We said the total output is equal to the total inputs. So both of those entries are the same in numerical terms. Okay? So if you know the output of Farmer Fred is 32 and the intermediate consumption is 2, what's his value added? Yeah? So this cell here, this 30, you get as a residual. Okay? Right. Does Farmer Fred pay any taxes on production? No. So there's 0. We've already determined the value added of Farmer Fred is 30. Agreed? So the 30 and the 30. So if we know the value added is 30, he's paid no taxes, but he's got 10 for compensation of employees, what is Farmer Fred's gross operating surplus? Louder. I can't hear you. I'm getting old. My hearing aid's been turned off. 20. Brilliant. Right then.
And the subsidies on products, not on production.
Subsidies on product are sitting there. Subsidies on production, are there any? Precisely. Yeah? Okay.
You don't include subsidies in the use table?
Yes, but only if there's subsidies on production. In the value added at basic prices, there's a component that says taxes less subsidies on production.
So
The subsidies that the farmer received in this example, in this case study, I'm not saying in the real world, in this example, were subsidies on products. So those only appear in the supply table. If the farmer, for example, received 100,000 euros for not growing anything in one of his fields, that will be viewed as a subsidy on production. In this case, non-production. Okay? I'm just helping to distinguish this. Subsidies on products, subsidies on production. In the case study, there's no subsidies on production. Okay? But there is a subsidy on product. And you've recorded that in the supply table already. In the real world, you can have subsidies on production. Okay?
So you mean here subsidies on production, you are referring to product subsidies on this. There's none subsidies on industry, because you are referring to the column for industry.
No, that subsidy
On product.
was on the wheat
Product.
that the farmer produced. It's on the product. Okay? Yep.
The 30, would that be, sorry, the 20, would that be considered mixed income?
Yeah. Because a farmer can't separate his own wage from his profit. So therefore, for self-employed people, proprietors, in those situations, it's called mixed income. Yeah. Right then, moving on to Tom the baker. What inputs did Tom the baker have to make his output? He bought wheat. What product did we classify wheat to? And what was the value of that? 15. Does Tom the baker have any other inputs in the form of intermediate consumption? Nope. So 15 goes there. We already know what the output of Tom the baker is from the supply table, it's 35. We know what the intermediate consumption is, we've got 15. So therefore, what's the value added? 20. So the 20 goes there. We know what the value added is here. Has Tom the baker got any employees? So has he got any labour costs? So that's 0. Does Tom the baker pay any taxes on production? Property tax, yes. How much was that? 2. So what's Tom the baker's gross operating surplus? What's that? 18. Does everyone follow that one?
Not really, but go.
No, but what is it that you don't?
Oh, adding up wrong. Okay.
Are you sure you're okay?
How do you get to the 18?
Yeah, I was just
How do I get to the...
18.
Right. You've got the 35,
Yeah.
the output. You've calculated the intermediate consumption.
Yeah.
Therefore, value added 20 is a residual. Agreed? 20 goes down there because that's value added. No labour costs for Tom the baker, but he pays property tax of 2. Therefore, his gross operating surplus must be 18. Is that clear?
Yeah.
Everyone happy with that?
The property tax may not be related to production.
That's correct. Tom the baker could have made lots of loaves of bread, but he paid a fixed property tax of 2. Okay? Irrespective of how much bread he made. So therefore this tax is a tax on production, not a tax on product.
Okay.
Yeah? Okay. Right, John the retailer. In this example, and not the real world, has he got any inputs? Sorry? Has he got any intermediate inputs? There's a clue on the... He hasn't got any intermediate inputs. And remember, this is a simple case study to get an idea of what goes where, why. In the real world, obviously you will have running costs like insurance, petrol for a van, etc. But in this example, John the retailer has no intermediate inputs. Okay? We assume he bought the van last year. He's not bought it this year. And it runs on air, so he doesn't have to pay anything. It's new green technology. Okay? So, we know what the output of John the retailer is from the supply table. Therefore, all of his output in this example forms his value added. If we know the value added, has John the retailer got any employees?
Not in this one.
So no labour costs. Does he pay any property tax or any other form of taxes on production? Nope. Remember, the sales tax is a tax on product, and you've already recorded that there with that 4. The sales tax was 10%. Was it 10%?
Yeah.
10% of his sales. If his sales were more, that figure would be higher. Okay, but he's got no property tax, no tax on production. So therefore, in this situation, all of his output is equal to his value added, is actually equal to his operating surplus. He's a very efficient character. All he does is for profit. Right, services. We know what the output of government was in this situation. Does the government, in this case, have any intermediate consumption? No. So the value added is also 2. Does the government pay any taxes on production? No. It's almost like the government paying itself, which is very strange. Does it have an operating surplus? You don't know. Does it have any labour costs? And the labour costs are? So therefore its operating surplus is? Okay. Right, so therefore, we now know the total intermediate demand and we know the totals of the various components. Right, in household final consumption, what goes in there? What goes in the household final consumption column? What entries appear? Right, 44. On which product? And that's the bread. Is everyone happy with that? Remember, the 44 is the full purchaser price value of the bread. So it's not the sale of 40 by John the retailer, it includes the 10% sales tax. We pay that as a purchaser. Anything else that goes in that column?
Accommodation.
Correct. And what product was that? And what was the value? So the total in household final consumption is 46. Is everyone comfortable so far? I'm going to accept your question until the end.
If the
Sorry.
person taking advantage of the accommodation is a tourist from abroad, would that be an export?
If it was a tourist and abroad, would it be an export? Yes. It's an export of a service. It will not be in household final consumption, because these are domestic national residents. So this would appear in exports of services, but it'd be on the same product. You're a tourist. It's tourist expenditure in this economy, but that tourist is abroad. So you'd have an offset in exports of services with household final consumption. Okay? So you just the same product, switches columns. Okay? Anything else? Right, what appears in government final consumption? Remember, government consumes its own output. What was government's output? So what's his final consumption? And what was the product? Excellent. And I know I'll come back to your government point, because I know it's a sort of different one. But what appears in gross capital formation? The oven. And the product was? No, the product was production, and the value was 5. Anything else? Okay, and now what appears in exports? The wheat was exported. What product's wheat? Agriculture, and the value of that export? 10. So if I now add up the total demand for all these products, by magic, if you notice, 25, 51, 0 and 4 is the same as 25, 51, 0 and 4. So the total supply of each of the products in Farmer Fred's world is equal to the total demand for each product. The total outputs of each of the industries is equal to the total inputs of all the industries. Is everyone comfortable with that? Okay. I will, yeah, okay. In this situation, all of government output is consumed by government. You and I don't pay for government output, but I'll do a separate example on that one. Okay. Right, so the supply for each product equals the demand. The outputs of each industry equal the inputs. And this is already balanced. Is everyone comfortable with that? Is there anything that you don't understand why they've been allocated to where they are?
So the subsidy for the farmer ends up in the mixed income of the farmer.
No, the subsidy in the farmer helps to reduce its output. You may be ultimately right, but that's not the point. The farmer would have sold his output for 30, but he sold his output for 25. Remember? But because he got the 5 subsidy from government, that enabled him to sell his output for 25. If he didn't receive that subsidy, that 5 would be 0. The farmer is likely to sell his output for 30. Agreed? Because the farmer's not going to lose money. Well, he doesn't want to lose money. If ultimately the subsidy he receives he treats as a profit, he's cheating, but obviously it shows as a marketplace that can move the value of the price of his output a lot more. government is providing a subsidy because it wants food to be available for society at not huge prices. So it helps to subsidise the farmer. Okay?
Why don't you consider a retailer making operating surplus of 5 by first taking intermediate inputs in terms of bread, final product of bread?
Right. In this example, John the retailer has no inputs, no intermediate inputs. He hasn't got the running costs of a van, employees, etc. Okay? But his input of bread, it does nothing to the bread. He buys the bread from Tom the baker and sells it.
You don't consider that as intermediate input?
No, because he's bought goods for resale without any further processing. So there's no production activity that's taken place. Okay? It's pure distribution activity. Okay? Which is the reason why I've shown this with no intermediate inputs, to illustrate all he's doing is distribution. If he was doing something with the bread, so let's say he sliced up the bread and made sandwiches, okay? That's catering output. He wouldn't be classified to the retail industry, he'd be classified to the catering industry, and bread will be an intermediate input. Because bread plus cheese plus margarine or butter plus smoked salmon is made a sandwich. So the bread in that situation is an intermediate input. The output is catering, is sandwiches. Okay? But then he wouldn't be classified into retail, he would be classified to the catering industry. Okay? You were going to say something?
Unless he got the same profit from retail, unless he was still classified as retail through greater profit through there, or am I?
Correct, yes. If his principal product was still retail, then yes.
So therefore
Yeah.
it would appear on the retail product line.
No, he would have output of catering. Retail industry, he would have the output of catering product.
Sorry.
Okay?
Can you give an example of how the retailer takes its intermediate inputs?
In the real world, all retailers have intermediate inputs. They have heating, lighting, advertising, market research, but in this case study, I'm keeping it simple, there isn't any. Okay?
Example of the government intermediate.
Yep.
Would that be intermediate? And when will that consider as employment versus intermediate from the government industry?
I'm going to take your point with Tommy's in a couple of minutes, okay? Right. Everyone's happy that this is now a balanced scenario? So, the three measures of GDP. First one is production. And how is that estimated? You sum the outputs and you deduct the sum of the inputs plus taxes less subsidies on products. Now you have to take my word, that is a basic national accounting identity. If you follow that, using this example, the sum of the outputs is 74. So you add up all the outputs for each industry, which is equal to the same as the total inputs. Take off the inputs, and the inputs are in the form of total intermediate consumption. And in that situation, it's 17. And then you add taxes less subsidies on products, which is the 4 minus the 5. What's that, 56? So if you take from those two tables, the sum of the outputs is 74. The sum of the intermediate consumption for all industries is 17. The taxes less subsidies on products is the 4 and the minus 5. Okay, so 74 minus 17 plus 4 minus 5 gives you 56. If you just follow that identity and draw the numbers from this table, or two tables. The income approach says sum the gross value addeds plus the taxes minus subsidies on products. If you add the value addeds, you get 57. You add the taxes minus subsidies on products, you'll luckily come up with a figure of 56. I'm just trying to squeeze this into this sheet now. Does everyone follow that one? And then the final one is expenditure. You sum the final demands and you take away the sum of the imports, because the imports are not produced in your domestic economy. And in this situation, the sum of the final demands is 46 plus 2 plus 5 plus 10 minus the imports, which is 7, which amazingly also gives you a figure of 56. So if you assume that the components of the three approaches to measuring GDP are calculated using these identities, we've gone through a Farmer Fred case study, populated the supply table, populated the use table, and when it's balanced, which this example is, you can apply these three identities and you will come up with one estimate of GDP. If the table is unbalanced, you will not come up with one estimate of GDP. The same principle will apply in both. Everything we're doing today is in current prices, but the same principle, if you apply the identity to a balanced supply use table in previous year's prices, you will have the same growth rate in volume terms. Okay?
And you said the taxes on income appear somewhere else
Yep.
in accounts, so that's completely outside.
It's outside the production boundary.
And nothing to do
So
with
grants, transfers, taxes on income, they're in the national accounts, but if you think of the national accounts as something that starts at the top, you produce goods and services, okay, in that process you get value added, you then pay out labour costs, you pay out the taxes, you have a gross operating surplus, you will then have to pay out dividends, As you go further down the accounts, those items appear. So corporation tax is further down, it's a tax on income. Okay. Right, anything else before I take these off? Right, Tommy and Jameen mentioned something about government. Anyway, what's government? Is it that important? I don't know. Right, government is a unique animal in terms of, I know we've just gone a couple of minutes over, but I won't be long. The way we handle government in supply use tables and national accounts is quite unique. So central government, local government and non-profit institutions,
Can you move down a little bit?
sorry, are known as non-market sectors. So these are the businesses that are classified, or units, producing units classified to these sectors, are treated as non-market. Their output that they produce is essentially for free. They're not charging economically significant prices. They're not making an operating surplus. Their purpose is to provide a service. Their purpose is not to maximise profit. So, in this situation, because they don't have sales as such, we have to make sure, as they're an economic player in the economy, we record them correctly. And that way is, if I say we have public administration and defence, which is obviously part of central government and local government, and where many, or the NSIs will be classified to, and many people in the audience probably classified to. We buy various inputs, heating, lighting, carpets, etc. So government has total intermediate consumption. And if I say that's 1,000, an arbitrary number, the government employs people, and let's say it pays them 500. The government doesn't really, in my example now, doesn't pay any taxes and subsidies on production. I'm just going to keep this simple. But it also has what we call consumption of fixed capital, i.e. depreciation. Government has buildings, vehicles, etc., and they depreciate over time. That depreciation is a cost. So let's say that is 50. So the total inputs for government in this example is 1,550. By definition, we said that must equal the total output. In this example, I am saying government only produces government output. Okay? Now, we know the government sells few items, they have incidental sales. So let's say it sells its publications. It will receive, let's say from the banking industry is very interested in official statistics, and it pays 10 to government for its publications. Okay? Households have also paid a certain amount for government services. In central government final consumption expenditure, I will then have 1,520. The output of government is 1,550. It's received in the form of receipts from sales of 10 and 20. The remaining amount is central government final consumption. Okay? And if you notice, the columns balance and the row balances, the pad row. There's a lot of magic going on this morning. So in terms of your point, Tommy, you can see why government appears in the intermediate part, because it has intermediate inputs, and it also appears in the final demand part because it's got final consumption. Okay? The 10 and the 20s is market output. So you got government is a non-market producer, but it has some small amounts of market output. Right, now is that clear for all the group? Does that make sense? Now that's for non-market producers, there's a different way of treating them. We sum their costs because they consume most of their own output. Does everyone follow that? Okay. Right. Apologies for the extra 8 minutes or whatever. Tea time. But very quickly, tomorrow we will summarise the supply news tables, and there will be a proper case study and some more work. But it will put into place things that you've picked up today and yesterday. Okay? Cheers. Don't embarrass me. Oh no.
I'm serious, this is really useful.
I think someone's Somebody else is suspicious people that don't know about it.
Good to know that I don't need to be productive to have no activity.
Oh, yeah, but that's just cheating. Yeah, I just want to make sure I've packed up properly. Sorry, do you need to? Oh, no, sorry, but they're for the group. I need to keep them for the group. I need to. Yep. Cheers, thanks for that. Sorry, go on.
Trying to check my email. How can you do?
Do you have a laptop? No.
Here possible?
Yeah, maybe it's possible.
But not on the
Correct. In this fine-
not on the wall.
Yeah.
Correct. You've got your imports column.